Hello and welcome to Not So Quick Take TA today here on Landy's Crypto Corner. Today is going to be August 7th, 2024. Forgive me, I actually had to go and look. Today's going to be a Not So Quick Take TA because we're going to cover trend, support and resistance, volatility, and momentum, which are the four keys or four pillars to any successful technical analysis. And we're going to take a look at Bitcoin's daily price action. We'll go through some of the normal stuff that I do, but first we're going to take a look at the daily trend. We're going to relate that to major areas of support and resistance. I'm going to show you a few confluences on the chart here. We'll then take a look at volatility on various time frames, and then we'll move in to take a look at how that all creates momentum. So right now, Bitcoin is hanging on its lower low structure. If we were to zoom in here a bit and look, you can see where we're finding primary resistance. It's at the closing lower low, right? So this was the prior lower low on a close at around roughly $56,000, 55,700 here on the Coinbase chart. You'll have to forgive my voice. I've been talking all day. But this is the primary area of resistance right around this low, just above it into this kind of order block zone at around $58,000, which just so happens to be, that 58.4, 58.3 to 4 level that I've talked about before, which is this closing low over here. Now, as long as Bitcoin is trading above this wick, we are seeing things get bought up since the initial fall on Monday. So we did talk about this move down on Monday that hit our distribution target zone. But one of the bigger questions I got is like, okay, well, where do things go? I understand the criteria that you want to see to be met for things to move up, but in terms of trend, like I'm a little unclear on what's happening with trend right now. Well, right now it's just a trend break to the downside. So, we went from, let me go ahead and get the right tool here to demonstrate this. We went from the prior lower low here at 53.5. We saw a low really set in and around here, but we'll go with the swing trend. This was actually the closing low, but we had a nice uptrending structure built on the swing structure here. We saw even kind of equal swing lows there. That was a little bit of a warning, by the way, that this didn't get continuation above one of our key levels there at $68,000 to $70,000. But we have, we'll go ahead and make this white. It's a little bit too, the color's kind of clashing a little bit with the candles there, but so is white, I guess. Can't win in this situation, sorry. Now we've got this uptrending structure here, which means that the trend break came in here on this low side structure at around that 63.2 to 300 area. You can choose whichever swing low you want. Any closes below the closing low up here met the criteria for breaking that structure on a closing basis, but gave it a chance inside of this zone to be a deviation of trend. And that is between that 63,200 to 300 wick low here and the closing low up here. But once we saw this close come in here, it had a chance to change the trend, and you can see how it tried to do that. So we had the conditional close that would have been was a structure break of the uptrend on a closing basis, but not a swing at that point. What we then had was a nice sweep of the lower lows here, or the higher lows here, not lower lows, but this created a lower low on a swing, but it still tried to claw its way back up. Guess where it found resistance? Right at that close open of that higher low structure. So essentially, once it lost and breached the uptrend on a closing basis, it went for the actual higher low structure here, swung it with a lower low, tried to get bought back up above that 65,300 in this case, and it failed. It even tried on the Friday candle moving into the weekend. It closed below it. Now we have a structural break, not just on a closing basis, but on a swing basis. So what we need to see from here is we need to see a low set. This could be the actual swing low, but we need to see a closing low set. Right now, you'll see closing lows set on any closes above this wick high, which is coming in at roughly $57,800, almost $58,000. I would want to see closes coming in above the open of the dump off candle on Monday at around 58,100 to 58,200. That's for me to call it a low set. I need to see closes above there. In this case, it's 58,131 31 in this spot price chart here. So that's where I would call it a closing low set. You will see indicators fire off saying this was a closing low, set above, 57, 757 in this case. I wouldn't take that because I need to see it close above that dump off. But in this case, that would set at least a closing low. And then we're looking for, okay, where could things possibly run to? That's when we look left towards, support and resistance zones, which we're going to get to. Now, that's not going to be something that I'm going to address right this second, but I want to show what I'm looking for next. Essentially, if this is going to be the actual low, because right now, yes, we have some swings down as it stands right now, but this is essentially just a big dump off. Now, in order for this to be just a deviation, which in this case it's likely not going to be, it would have to close back above this high at $70,000. That would be a deviation. That'd be a massive deviation of trend. I do not think that that is what we are going to see. But what we need to see is something like, we have this low here. We get a lower high. We come down and we make either higher lows or equal lows, and then come up and rather take whatever this high would be, right? So wherever the next lower high is, you want to see higher lows, or you can also look for something like this, where it was like equal lows. That would also be valid. And then you look for it to take out the lower high. So that is what I'm expecting from here. I'm not expecting, don't take the LARP lines that I'm drawing here as the zones of interest. That is not. This is just an example. But in this case, I would find it very odd, and I would actually be a little suspicious of price if it came all the way back up to $70,000 and just closed above it. Just putting in a low and then zooming right to the top side. Probably going to see a very, very large pullback from there then. Which, is possible because of the increasing volatility on the daily, but highly unlikely that it wouldn't put in a lower high before trying to put in a higher low or equal low structure to then go and take out and change trend at a lower level. That's essentially what I'd be looking for from here. And, it's not anything too complex, but, we have these areas of interest on the longer term time frames that Bitcoin is kind of hanging on and has spiked through, and some major areas of interest overhead. And this isn't going to be the chart that I normally show, but for many of you that might be new, this is actually the long-term closing and swing chart. So this is the weekly and monthly closing highs from the prior cycle in 2021, and you can see here, I'll just quickly explain this for those that have not seen it. We have the new all-time high up here. Let's go ahead and move this out of the way. Excuse my voice. I'm having a little bit of trouble late in the day here. We've got our 73,835, so that's the current all-time high. And then I have the current low marked for the swing low at $49,050. That's the only current price action on this chart. Everything else that you see here is from 2021 or 2022. We have the all-time high swing zone. This was the first high that was put in at $65,000 to the second high, or the actual all-time high of the prior cycle at 69. So that's the all-time high swing zone. Those are the wicks. We have the closing zone from October of 2021 and March of 2021, respectively. These were monthly closing highs. Something to keep in mind is that this March of 2021 closing high is not just a monthly, it's actually a quarterly. So I should probably note that here. Let's see if I can do that without, so monthly, and this would be a quarterly. So we could do QRTLY. And this was the actual closing quarterly high. So this zone is between 61,350 and 58,800. Some charts it's going to be $59,000 here. And then just below it, and where Bitcoin has traded towards, is the September of 2021 weekly swing high at 53. And then there was two closing highs on the weekly there from August and December of 2021 respectively. So this area was previously retested earlier this year. So these 2021 weeklies on the swing and closes perfectly tested as resistance at that September of 2021 weekly swing high at 53. And then essentially the supports around $50,000 held, price up, roughly in that area for the weekly closes before Bitcoin went to make that new all-time high. Now, it did wick all the way through that area. And funny enough, if you were to take the horizontal here, I mentioned this on Monday, the horizontal here actually lines up with the highs from another major area. This is the August of 2021 monthly close to the March of 2022 monthly closing high. So these were two very big highs that were put in. You'll notice I don't have the swing. I will add the swing in just a moment. But essentially, the March of 2022 monthly closing high is at 45.5. And then we had a monthly come in from August of 2021 that was a key level before Bitcoin went and made the actual all-time high of that cycle at $69,000, which is coming in at around $47,000. On the way up earlier this year in January, Bitcoin did test this right into the ETF launch. And you could see that the ETF launch provided for a nice basing point for right around where price spiked just on Monday. So we spiked basically the ETF launch highs before the big sell-off and liquidity adjustment, and then basically they got their buys at nice and low in the range into another key area of support. And this is something that I do really want to note. When this was going on in January, we had the December 2023 run up into the ETF launch. We saw no closes above that $47,000 monthly from 2021. Back in January, did wick through but rejected, and then came down and perfectly tagged the January of 2022 monthly close, and that was at 38,500. Now this is going to be a key area if things get really bad. I don't think this is going to be an area that we see Bitcoin trade to, but this is something to be aware of. This $35,000 June of 2021 monthly close to the January 2022 monthly close at 38,500. Now, the main reason that I point out a lot of these levels, and we got to flip to the monthly and add the swing high here. This was swing high of the actual bear market. And let's go ahead and make this a little bit of a thicker line here. What are we using? We're using the second one. All right. So this should be marked because there is some important things around this area for this closing zone. And, Bitcoin came very close to tagging this bear market lower high spike at 48,240. This is the zone that I typically talk about as my distribution target zone 2 that you're going to see in a moment, around $45,000 to $48,000. And this is going to be which month was it? It was March of 2022 monthly swing high. So let's go ahead and label this real quick. Call this March of 2022 swing high. This would have been the monthly. I think it was also weekly, but we're just going to call it monthlies. That will take precedence over the weeklies. So this is important. Wow, that text is large. I don't know what I'm using for the other text. I must be using 16. Looks close enough. All right, so let's come back to this. And this chart is basically utilizing the prior cycles downtrend as an area to look for when Bitcoin is approaching that prior downtrending structure on the highs, or the prior uptrending structure, depending on if it's 2021 or 2022. we're looking at that as areas of resistance. You flip it back into support after retest, like at 38,500, right after the ETF launch in late January, spiked it nearly to the dollar before going on that nice run to the 50 to 53 zone before making the all-time high. And now it's round tripped right back to the top side of that big structure. So, this is something that we need to note, that sitting above these weeklies is a good thing, right? So sitting above the $53,000 level is a good thing. If we were to see Bitcoin recover the quarterly overhead, a very, very key level that I would want to see by the end of this quarter, especially. We don't want a bearish recovery of that quarterly close. Now, there is still time. We've got 2 months basically to go, essentially 2 months to go for the quarterly. But we need to see Bitcoin closing back inside of around $58,800 to $59,000 for the longer term timeframes, recover above that $61,350, then go test the $65,000 to $69,000 zone, prior cycle highs, and then take out the all-time high going to March. So I show this because you need to know some of the reasons why on the local chart I have called certain things out. I think that it's very, very important that that you understand the context when looking at this chart, which has changed. Now, this is the normal chart that I have shown you in these videos for quite a while, and that I often share in the Discord servers. But it has been adjusted now. The danger and risk zone have moved around a little bit here. So essentially, the danger zone is now the prior lower low, right? Because we haven't seen Bitcoin close below this 53,500. It has wicked below into our target one of distribution. I did note on Monday that we now have below our target 2 of distribution, which is essentially that monthly lower high that I was just showing off, is roughly 45.5 to 48,240, but 45 when you account for electrical costs, which I'm going to show you in just a moment, to 48 would be target 2 of distribution. That's provided Bitcoin closes below the danger zone and then starts filling out target 1 of distribution. Now, the nice thing is, because it wicked through target 1 and it hit the ETF launch highs, it can deviate this target 1 of distribution a little bit on a close, as long as we're not seeing closes now below $49,000. If we did start to see that, then I would look for target 2 to be the next natural area there at that 48 to 48,240 on the top side of target 2 distribution, down to that 45 or so where the electrical cost is. And of course, we have that key monthly close at 45.5. So there is levels within levels, but just generally between the electrical cost and the high here of target 2, I just call it 45 to 48. You do see that there is a target 3. And I mentioned this on Monday. The reason why these zones are separated is because of the closing criteria. If we close below electrical cost, I'm looking for price to possibly spike down on the dailies and maybe front run target 3 of distribution. But if we see any higher term time frame closes, and not just dailies below electrical cost, then I would be looking for target 3, which is around 42,500 to this 38,500 that got spiked, which is a major monthly level as well. I'll be honest, I'm not convinced that even if Bitcoin were to go into a full-on daily distribution, that it would ever get there. So that is just a cover your ass below electrical cost kind of a target, so that there is some sort of semblance of targets. You could be a little bit more aggressive with that. Take the top side here at like $43,000 to $44,000. But for conditional closes, I'm looking at anything below electrical cost would probably be an extremely fast, extremely severe, extreme move. Just like what we're seeing, right? What we saw on Monday, where we have, a wick that's essentially, it's essentially a $5,000 or $6,000 wick, right? So what I would be looking for is like, kind of a landing spot for a wick under there. And I'll discuss that why that would be in just a moment. But as you can see with the adjusted zones, they're fairly tight together. And the reason why is the bearish reclaim criteria for a weekly level that was also a daily level, because we did see this area tested, this 2021 weekly swing high tested in January into February. that would be an area that if we start closing below, $53,000, I would look for the $50 to $53,000 target one down here to get filled out. Now you'll notice that because Bitcoin is trading in between some of the common levels that I've shown before, this is now the 55,850 level. As long as Bitcoin is trading above here, it's got a chance in here. This would be the risk zone now. So between 55,850 to that 56,500, which was the prior lower, 53,500, I'm sorry. 56,500 is up here. So that's kind of encompassed in this risk zone now, but we have the actual 53. So I got to get it right. 53,500 to 55,850 is now the risk or the danger zone. As long as Bitcoin is trading above there, I would look for, price to head up somewhere around, 58, 3 to 4, right? So that would be right around the closing structure of that prior lower low downtrending area. But more essentially, it's this wick right here at around that 58,400 or so. Recover that. It's kind of in no man's land. It's in between support and resistance. If it can hold that area as support at 58.4, I would look for 60,000, 2 to 300 as a potential target and an area that needs to be reclaimed. And then we're in a much larger zone. And this is, I believe I'm calling this the reclaim zone now. Let's zoom back out, make sure that or the recover zone. This zone is basically this low to this high. This was the downtrending high of the prior downtrend before this uptrend, and that's coming in at 63,800. Because it is more recent price action, it is more relevant. If price was to start closing above there, again, it's in no man's land between support and resistance. If it can hold 63.8, then I'd be looking for the pivot zone overhead, which is this lower high to this lower high. So this is 65.5 to that 67,350 pivot zone. I will share this chart, by the way, in the comments down below this video. So this is essentially 65.5 to 67,272, I believe. Yep. Then above there, 68 to 70, and then the all-time high zone. So the run the highs above there to the actual all-time highs around 71,500 to that 73,835. Now, the reason why, and I want to be very, very clear about this, that I break these zones up is because this is conditional analysis. And when I say conditional analysis, I mean that we need to see daily closes above or below these levels to start looking to the next level. So one of the reasons why I'm able to get very tight like predictions, I guess you could call them. They're not really predictions, but really close to where price is landing is because I'm using conditional analysis, meaning that if we see a close on the daily or a major lower term time frame below a certain level, we can look to the next level. But it's more about where the daily close comes in for structural purposes. So if we did see, for instance, a close above 58.4 on a daily close, the next big area of overhead resistance is that 60,000, 2 to 300 to that 63,800. Wicks above, wicks below don't really matter. It's the close. So that's what we're looking for price to move on to, either another level to the upside or come back down, right, to 58.4, so on and so forth, where the zone would be between 58.4 and 55,850. Below there, start closing below 55,850. Then, we look to 53,500. And this zone is really just right on top of the target one of distribution at this point. We start closing below there. I'm looking for price to get daily distribution down. Again, I'm talking about closes below. And that's where we would see this wick filled out. Any closes below that level at 49,941 here on this chart, which is essentially this close open little stutter step on the daily here. Then I'm looking for this low wick to get ran. Closes below there, then I look for, continuation, essentially. Swings of those areas are perfectly fair. If we're not seeing closes in them, wicks through are just opportunity, both on the short side to the upside here, where it failed to actually close above 68, but it did hit our target at 70. But the overhead resistance was 68 68 to 70,200 roughly. I was looking for price to run to around 68 to 70 and then pull back. I was kind of hoping for the bulls that it would hang out up there and try to run the highs, but it's a different structure right now. So things are changing. Now that we have kind of the trend, the support and resistance out of the way, and I've explained pretty clearly, a lot of this is for a lot of the people that are a little bit newer to my analysis. A lot of this is broken down so that it can be a little bit easier for people who are newer to understand. So please understand that if you are very practiced in technical analysis and maybe you do not like what I'm doing, understand that I understand a lot of different schools of analysis, and this is to break it down for people who are not really that deep into it, but would like to start getting into this and defining criteria. So it is getting a little complex on the chart now, but that's because we have a lot of conditions. We will basically erase this and start over in just a moment, but I want to talk about volatility at this particular moment and kind of how I use volatility when it as it pertains to the support and resistance levels. So we have Bollinger Bands here. This is a 20 simple. That is the basis band. And then we have first, second, and third standard deviations to the upside away from that 20 simple. And then first, second, and third standard deviations to the downside away from that 20 simple. We see that we had, an expansion down and then a very quick mean reversion back to the top side here. And that's where I was like, we didn't see any real consolidation either at the lows and get a pinch in the bands. We just went from expansion to further expansion back to the upside, which was making it, kind of go against the volatility trend in that case, limiting the upside. And that's one of the reasons why I was looking for essentially where this closed at, double top on a close, essentially at $68,000. Ran the upper second, started to lose the upper first, couldn't even make it, and back to tag the upper second after that. So, and then it got, mean reversion back to the basis, lost its key levels on that Friday for that trend, and then started to see the pinch in the Bollinger Bands and then the expansion to the downside. So right now, what I'm looking for is closes back above the lower first, essentially. I would say, again, right where that overhead area is that I pointed out, the top side of this risk zone at 58,400. That would essentially raise the target to that lower first and above to that 60,000, 2 to 300, and to the basis there at 63,800. Now, to be fair, the basis is at like 63,400 to 500, which is essentially right around these wick lows. So, but that zone would be the next zone of interest if we do start seeing closes back above 58.4. Then I'm essentially looking to 60,000, 2 to 3, to that 63.8 as an overhead resistance zone. And then above there, you could see it's got to get above, 65.5, 67,272 to go test $68,000 again by the upper first. We need to see some trend build, I believe, before that. As you can see, this would be against the actual trend of volatility in this case. And if we were to see closes back below the lower second, it could salvage itself, but it's essentially right on the edge of distribution at that. So closes below the lower second would be below the prior lower low at 53,500. I would look for distribution into our 53 to essentially $50,000 area, possibly running that wick low at 49. This is where I would look for dailies down in here, and then start to get some reaccumulation, try to turn trend around from there. Otherwise, I'd be looking for it to come up, make lower highs, try to higher, lower, equal low its way out of there and go. Now that we have support and resistance, or trend, support and resistance, and volatility kind of covered, of course, not in depth in terms of explanation of volatility, I know, but we can go ahead and look at momentum. So we'll get rid of all the ugly charts for a moment, or all the ugly zones that I have drawn here. Let's go ahead and look at momentum. Now, Bitcoin is still on a downtrend, but momentum is pointed up. This is a regular Stochh, not a Stochh RSI. So this is measuring close over close price momentum. And we can see that we have had some higher closes, right? We had the Tuesday close that came in higher. That did start to turn the actual Stochk back to the upside here. We can see the pivot is 50,500, so it's right in that distribution zone. So as it stands right now, if we were just looking at essentially this high to this high as a distribution zone, because that encompasses the low, we could go and draw something like this just very simply on our charts, because we know the zones. We can say like, okay, this is the zone basically 49 to 53. If we were to start seeing Bitcoin close or come down to that pivot, that's right in the middle of this zone. It can hang out there as long as it's not closing below the wick low. Then we'd be looking for a reaccumulation or a nice bounce out of this zone. So that's where we could potentially play out. Like maybe this is a swing low to swing high, and maybe it closes a lower high in here, and this becomes the lower high. That's where we would start to entertain a look like, we've got this here. And then if this was to do a 3-candle structure, meaning it closes below $54,000, this close open here, if it closes below, this would be the lower high. And then we'd be looking somewhere down in here for support, hold on to maybe that momentum pivot, and then we look for something like this, for this to be like a higher low, equal low. It could come down to be equal lows or even a swing. But essentially just break the downtrend. That's what we would be looking for. Now, I don't know if that's what's going to be happening today. It looks like it wants to pump to the lower first from a volatility perspective, so somewhere in the $58,000 to $59,000 level. And then we also know something key, because we just looked at it. We know that $59,000 is essentially that that quarterly close right here, right? So it's like 58,800. So we know that this area here, $58,800 to $59,000, you'll recall after going through some of those charts, is a really key area overhead. So we can see that that is the quarterly, that is right where the daily lower first is. So if it can reclaim that, that would be a good thing. You can also see that that would also be a reclaim of this lower low structure, this lower low deviation structure, and that would put it essentially back in its primary range, this overall range that it was trading in at the highs up here, with the violent moves in between towards the end here, as it is essentially on a closing basis still meeting the criteria for those pattern traders, even though the wick through probably wrecked most of them for the traders that utilize broadening wedges and stuff like that. I'm not a pattern trader, so I don't really go for that. There was some nice confluence on the lows here. This violated that, but not on a close. But what I really want to illustrate here is kind of how everything is fitting together, how we're looking at trend, how we're utilizing our support and resistance levels, and then we can edit down that bigger chart that I have into chunks or sections, right? Like the 49 to 50 now as our target one of distribution, or 50 to 53 if you want to keep it the tighter distribution zone. Being this area down here is primary support that it can dip into and try to reaccumulate in. And then primary overhead resistance right now, from the looks of it, is not just going to be the local structure, but it's going to be that big quarterly structure, because that is confluent with a volatility level of interest, at least for today. So one other thing that you might have noticed that I had on the charts there, on the other chart, was the electrical cost. So I do want to burn your eyeballs out of your head by switching over to the Caprioli chart to see where electrical cost landed. I already know it's $45,000, but I'm going to show you. So prepare yourself, because we're going from a black screen to a white screen. All right, so we are on the Caprioli.com charts section, where he has his handy indicator showing us electrical cost, total production cost, miner price, and then actual price. So right now, Bitcoin's electrical cost is continuing to rise, and this is because there is there has been a little bit more competition on the network, but not much. We had the big difficulty adjustments down, and typically it adjusts very quickly. And now it's recovered a bit, and we are seeing electrical cost at $45,000. So essentially just below that major monthly level. So, at worst, if things did get really bad, I would be putting the electrical cost level at minimum on your chart. So we can go like this and we can double click it and we could say, make it a different color or something, but we could say, electrical cost or whatever you want to call it. We can call it electrical cost. And then you can change its style and whatnot to differentiate it. So you know that it's not necessarily considered a support and resistance level, but it's essentially a support and resistance level. So it's now at, we got to change that. And if you want to do that, you go to coordinates on TradingView. I have gotten some questions about this stuff. So we'll call it $45,000, right? So at worst, this is one of the areas that I would be looking if we saw target one of distribution breached and closed below. I would be looking for some low side structure to come in around there. So now we are building out our zones of interest in a very simple manner. Primary overhead resistance is going to be the common areas with the most volume. You can use a volume map for this and like all kinds of other stuff. But you can point out that like $62,000 is obviously a pivot on price here. 62 to the lows roughly at $60,000, right? So it's regain 58 and then finding a common level, you call it, essentially, the $62,000 level here. We've got a whole bunch of stuff coming in like this low side structure. One of the reasons why I would look at this is because this low side structure has some candles in it, but it's been used as a pivot zone in the past for price. But of course, this all does line up with, or would line up with areas that I've already marked in some of my accumulation distribution chart zones. But, there is no, like you have to do it a specific way, but the areas and the reason why I show you the way that I do is because there is confluence across many different things, from trend to support and resistance to volatility and then momentum for the pivots. The daily looks good for a bounce if it can sustain above that lower first. From a volatility standpoint, you take it level by level, but I would, from the volatility standpoint, be looking into that zone around the high side at that 63,800, in that zone that I had mentioned. Obviously, when I turn this back on, you're going to see that there's crossover here, right? But it's that 60,000 to 6. It's a big zone. It's 60,000 to 63,800. So it's a wide zone up there. And something that I do think you should pay attention to for potential lower highs. Into the bottom side of this structure would be a retest of the break of trend as well. That doesn't mean that it has to do that. It could run all the way from the lower bands to the upper bands again. But even when it did it the last time, we got a high here, higher low, high here, higher low, and it was all as it related to the areas of resistance over here, right? So just keep that in mind. If you do see price spiking up aggressively. I think I did about as much as I want to do for today. I was going to do this as a little bit of a quicker video, but I've gotten so many new people following and so many questions and so many people from different schools of technical analysis that are trying to understand where I'm coming from in my analysis. I'm trying to relate to people who are maybe don't totally understand technical analysis as well as those that do. So if there's parts of this that are a little bit unclear to you, understandable. If there's parts of this that that are very clear to you, but you want some more explanation, go ahead and hit me up. For those of you that are fairly new to technical analysis, I will share my charts, and then I will update those charts based on the community discords that I am doing TA in. So that would be NatMonkeys, where if you own a NatMonkey, you can get in the Discord there, and you can have access to my channel where I will continuously update these charts, zone by zone, level by level. because it is a complex conditional chart right now, I'm going to keep it pretty simple. And then as price meets those conditions, lay out the next set of conditions. But you can get in there to the discords like Nat Monkeys, New Bitcoin Order, Pepe Ordinals Maxi. You can find me in there as well. You can find me in Extra Ordinals. That is one of the other main servers, and probably the main server for technical analysis where I get the most conversation going right now. And that's if you're looking, that's if you're looking in Magic Eden for the ordinal, that would be the Unchained ordinals. So, and then of course you can find me over in Ordinal Sigma X. So, but I will share this chart. I'll share a few charts in the actual comments below this actual post here on X. I also do upload these to YouTube. YouTube is not the focus right now. X is, but you're more than welcome to follow me on YouTube as well. And I'm going to wrap that up. I did a lot of talking. My voice is shot. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, stay safe. I probably missed a bunch of stuff that I wanted to say. Go ahead and let me know if there was anything unclear, if I missed something that should have been said. But yeah, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I'll come back at you again on Friday with the outlook, looking back through the week and then forward to the weekly close. With all of that said, Landy out.